The new income tax bill has a new feature. It can legally hack into your personal accounts, emails, social media, you name it. On April 1st of 2026, as the next fiscal year starts, there will be a new income tax law in place. Among the much talked about simplification of language and ease of tax filing, the Income Tax Department will have the power to access the digital information of individuals who they suspect of tax evasion. Well, nothing new about that, right? Not really. The taxman or woman will have the authority to access your personal social media accounts, bank accounts, emails and other fintech or online investment platforms. This new feature comes under clause 247 of the income tax bill, which gives power to the government and increases the capability of government agencies to investigate deep. So what does the change in the law exactly say? Let's compare it with the existing law. Section 132 of the current Income Tax Act 1961 gives liberty to income tax officers to search and seize premises if they are under the impression that a person is trying to hide financial documents or hidden income. It in fact also allows breaking locks if required. But in changing times in traditional transactions, making way for digital ones, the new income tax bill is expanding the scope by providing tax officials the power to gain entry into personal and financial data stored digitally. So which platforms and server come under this particular new bill? Email servers, social media accounts, online banking, trading and investment platforms, websites storing asset ownership details, cloud storage and remote servers, and digital application platforms as well. It basically means that if a tax official believes that someone has committed tax fraud or evasion, then they don't need a person's consent to break into these digital platforms. And who are the eligible ones to access your digital platforms though? Well, the new law gives authority to tax officials, including joint directors and additional directors, joint commissioners and additional commissioners, assistant directors and deputy directors, assistant commissioners and deputy commissioner. If any of these officials suspect an individual of tax evasion or undisclosed income, then the new law gives authority to any of these officials to override digital security measure to gain access to the personal data of an individual. Now, this certainly raises the question of breach of privacy and legal obstacles, doesn't it? That's something that perhaps could be contested under Article 21 of the Constitution of India under the fundamental right to life and personal liberty. The excessive power given to the officials do raise eyebrows when it comes to right to privacy and the possibility of misusing the power. The intent of the law may well be to catch the tax evaders. How will the government ensure that it is in fact not abused? We will leave you with that big question for now.